secrets in the channel for early about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we make use of the technical charts to analyze and see what exactly happened in the last week and how we can plan for a better trade for the upcoming week. That's starting from tomorrow, June 19, Monday 2023. So if you're not subscribed, please subscribe right away so that you don't miss out on videos that's coming in between. Right, thanks. Let's get into the charts. Here we go. This is the weekly charts that you see here, and Nifty on the left side and Banknifty on the right side. So look at that move. Wide range bullish candle is what you see on the weekly charts on the Nifty, but on the Banknifty you're seeing kind of a hammer, the long wick size indicating there is support bounce there, the bounce up that happened last week. But overall, it's a red candle, red hammer. The hammer on the top could indicate a reversal in case the low is breached of that low of that wish. Only if it is if the low of that candle is breached into I. Right? But otherwise, extreme bounce up is what happened to the Nifty, and Nifty also bounced up after a big fall following the Fed event that happened on last Thursday. Immediately bounced up on Friday, but that was not enough to show bullishness in the Bank Nifty. But clear breakout has happened on the Bank Nifty. Look at this, another view on the weekly charts of Nifty. So basically, we are having a flag pattern here, and the breakout happened twice. First time it did not meet the target of the flag pattern, then it fall into the flag again, and then second attempt it is it's also having a cup or rounding pattern, and the breakout of that is kind of confirmed on the Nifty. A breakout from the cup or rounding pattern, and it is close with the price. It's very close to the all-time highs. Right, so very good bullish candlestick patterns are seen on the charts of the weekly. Similarly, on the right side, Bank Nifty, you can see that it's also having a flag pattern, and it's having a cup and a handle. The pullback is the handle part, and then it is broken out. And if it breaks out from here, it could be a really big breakout that could be happening in the coming days. Is what the patterns are indicating. So that's another view. And going back to the daily view, this is what happened on Friday. Wide range bullish candle. Extreme bullishness on Nifty, and a wide range bullish candle on the Bank Nifty also. But look at this, it's even that is not as wide of the fall that happened on Thursday following the Fed event policy outcome. So in a way, if you look at that, it's still consolidating. It's an inside bar, a wide range bullish bar. So everything depends on, are we able to move above the Thursday's candle high or not? Are we able to, or are we going down below the Thursday's low, Thursday's candle low or not? So all eyes will be now on the banking index. So that's a wrap up. Our Bollinger Bands are showing expansion on the Nifty and continuation of consolidation on the Bank Nifty. So consolidation is continuing because contraction is continuing. Sideways move is still seen in Bank Nifty, but Nifty, it is no longer consolidating, it's expanding. So we can expect further up move on the Nifty, and maybe some more consolidation before it turns bullish on the Bollinger Bands on daily. Right. That's a summary. Let's look at the numbers. So week wise, it's Nifty has closed 265 points up. It's 1.4% up. That is forming a wide bullish candle. And remember, we are having a rally, and it's now 12% from the previous window. And there is a cup and handle rounding in the flag pattern that we have seen. It's breaking out of that. So it's inches having the all-time high. It's very close to 18,900, which is where the all-time high is. Bank Nifty has closed negative bearish, so it's flattish and red. Last week also it was flattish and red, the same. So it's 45% down. But we have a hammer that's formed after the bounce that happened on Friday. It's still consolidating and pulling back. If you look at the bands and then the inside bars, it is found still consolidating. It is, remember, it had made a 15% of breakout, and all-time high was hit, breaking out of that cup and handle and flag pattern. It's already happened. We have seen that. So daily charts, this is what you're seeing. So moving ahead, If you look at the support and resistance levels, since Nifty is very close to the all-time high, of course the all-time high that and rounding number 18,900 would be a major resistance, and after that you can look for 19,000 rounding number, again psychological level of resistance that could play in, and then 19,100 likewise. That's the resistance is upside downside. The first support could be seen at 18,700 nearby zones, and maintaining the 18,800 would be a challenge, and that could act as support if it further moves and pulls back. And then 18,700 and 18,600 would be the previous low, and then 18,550 level is a 20 moving average, exponential moving average, that's a support. And then 18,473 is a support after that, right? And so that's the levels that we have to watch out for the next week. On the Banknifty side, the first resistance will be to recover the 44, to take back the 44,000. That resistance first, and then 44,151 resistance after that, previous high, and then after that 44,500 levels, which is all-time high that is made recently, will be resistance, and after that 45,000 would be the resistance after that, after the breakout happens. Although intermittent resistance could be found at the strikes of hundreds, about the 44,500 levels, right? Downside, the supports could be seen at the major thing would be the sustained exponential moving average, which was breached earlier at 44,663 levels, and then after that support would be 43,600, 43,360, and then 43,250 and 43,000 levels would be the swing lows and supports. In between 43,233 would be the 15 exponential moving average support that you can see. That's the support resistance levels that you can see there. And looking at the momentum and the trend, ADX and RSI is what we use. Momentum uses RSI. So you can see that the momentum is rising, bullish, right? In the Nifty, on the left side, you're seeing the weekly charts of the Nifty, and the Banknifty's weekly chart. So it's bullish on the momentum side, on the medium term or the weekly charts. The daily charts are showing that the momentum has slipped for the Banknifty and has gone sideways, but it's rising up now, but still not in the bullish onset. But Nifty is bullish and rising up on the momentum on the short-term charts as well. So that's a summary of the momentum. So overall, the momentum seems to be fine for Nifty, but not that fine for Banknifty in the short term. But medium term, both momentums are good. Now ADX, the trend indicator, is in the bullish zones, right? So it remains bullish zones on the short, on the medium term, right? But it's falling slightly with regard to the trend strength in the case of Banknifty. But medium term is bullishness in medium. But short term, Banknifty has a problem with this in the DMI negative or the bearish zones on the trend, right? So Banknifty having weak momentum and weak trend on the short term, but medium term it should be okay, even though it's weak and falling strength. But medium term we have sideways momentum and a falling trend strength, right? Is what we see. So that's it. So Banknifty is something that is watched out with regard to the momentum and the trend as well. Coming to the volatility index, you can see the India VIX has fallen 2.4%. It's below the 10.84 historic low level. So that is extremely cautious, even though it's a low volatility. The reversals will be very sharp, as it is indicated earlier, once below the 11. So I'll keep a close watch on that. But low volatility would indicate that we can take more risk, and at the times we have to be cautious. And the fear and greed could be less. But the kind of patterns that's emerging right now is that very low volatility intraday, very high, very low VIX levels of below the 11 or 12. We have very high volatility intraday. That's what is happening. It's a new pattern that has emerged. But always when it is below the 11, you have to be cautious, because the bounce can be extremely up, extremely sharp reversals, and all these things can happen. So premiums will be less, of course, when you're playing with options. Yeah, so play it safe is what I would say. But low fear and greed in the market is what it indicates, as the market has moved up and the VIX also has moved down, aligning to that. The open interest rate of the Nifty showing that on the futures is showing that it's a long bit up, and it's a short covering both. It's also bullish in the Banknifty. So futures wise bullish nature. Open interest on the options for the June 22nd weekly expiry is showing that its put call ratio is 1.17. It's bullish. About 1 is bullish on the Nifty, and 0.96 on the Banknifty. That's also very close to the bullish. So it's almost bullish, you can say. So open interest data on the options and the futures both are bullish. Look at this. It's This is showing how the supports, the red indicates the supports and green is the resistance. So Banknifty showing huge resistance at 44,000. It's a triangle that is there, and 44,000 is where the highest put and call rating both are written at that same place. It is triangle there. The second level of Banknifty supports is in at 43,500 and 45,500, a wider range. But all bets are on the Banknifty, and it's on the 44,000. And Nifty, you can see that its highest supports are seen at 18,700. Second highest is 18,800. That's why the supports, the highest put rating is seen. Highest call rating is at 18,800, and after that 19,000. It's a tight, narrow range for the Bank Nifty, right? So that's how the open interest is seen. It's bullish, but it's very narrow range. Anything could happen. Right? So if there is a breakout, it's going to be mega big, and that's going to happen if the Bank Nifty is moving about 44,000 and above. Now, having a look at the industrial sectors, the different various sector indices, you can see that it's interestingly there is 4 sectors that are turned bullish now: auto sector, pharma sector, FMCG, realty. They are bullish in both time frames of weekly as well as in daily charts. So it's around 1% up there, 3% up in 1% up in the auto sector, pharma 3% up, FMCG 3.5% up, realty 3.5%. All the 4 sectors are bullish in nature, and trades can be taken. But what has to catch up now is that IT, which had fallen down, but caught up nearly 1% up this week. But it's having a sideways movement. It's still not got into the bullish, so we'll have to wait. Metal also has moved up 3% up this week and formed a wide range bullish handle also. But the momentum in this medium term has to catch up in the bullish. So once that is done, that will the club of the other 4. So across the sector, bullish moves are seen. That's what we can see that in the charts of the indices also. Nifty index on the left corner, you can see that it's bounced back to that sharp fall that happened on Thursday following the Fed event. And metal also is trying to move up towards the top, and momentum is almost into the bullish zones. Auto sector, you can see in that it's a consolidation breakout, momentum is already in the bullish zones. The farmer is broken out of the trend line and it's having a W pattern also. Momentum is all got in the bullish zones on medium terms. FMCG is already broken out of that parallel channel. Maybe some consolidation can come in, but momentum is in the extreme bullish zones. Trend is also rising up with very good strength. Reality is broken out of that trend line, and also the rounding and pattern that is happening since almost 2 years now. And now it is breaking out, and then momentum is bullish, and trend is also in the bullish zone. So absolute bullishness can be seen on the 4 sectors, and the 2 sectors of IT and the metal is also catching up. Metal is already caught up. IT is also catching up to get into the bullish zones. But yeah, so that's across the sector, bullishness is very much evident. Which now looking at the heavyweight stocks, the major thick stocks or the 7 stocks, we can see that there is some worry there because the HDFC twins are still sideways and then consolidating. Whether Reliance is a big move, and has happened, but Reliance just made beautiful up move, wide range bullish zones, and almost got into the bullish zones. So Reliance was the matchmaker of the last week, you can say. Otherwise, we still have trouble with the IT stocks. The Nifty is also having some consolidation and then bearish moves last week. With a sideways momentum, and ICICI Bank is also facing resistance. It slipped down, consolidating, but made it into the momentum of the bullishness. Kodak Bank having trouble after having a big swing up move. Once again, met resistance at the 2000 price zones, and then it's falling down with momentum falling down into the sideways zones as well. So across the major industrial sectors there is move. So move is not happening in the heavyweight stocks. The big moves are happening in the mid caps or other nifty non-healthic stocks. That's what. So buying is happening across, which is very positive, but selling is happening in the big stocks, which is the heavyweight stocks. So the market to move up, this has to change. Right? It is only Reliance that's really made a book move last week. Otherwise, HDFC Twins and IT stocks, Infi and TCS and ICICI Bank, Kodak Bank, all of them did not perform. Still, the market moved up. That's what we will keep on. So we hope that there could be breakout that is happening. At least 1 or 2 more of those heavyweights. That's what we will watch out for. What is happening there? So it will be very watchful whether ICICI Bank and HDFC Bank would be helping out in doing that. All eyes would be on HDFC Bank and ICICI Bank. Kodak Bank, these 3 stocks. If that means the banking index has to move up. Basically, once again, it's a proof for that. Institutional participation, if you see 6,650 crores of buying that is happening by Fyers last week, and domestic institutions 1,320 crores of buying has happened. So net to net, both the institutions have been buyers last week, which is happening since last week also. Multiple weeks Fyers has been buying now, which is what is keeping the markets up there. The derivatives sector also, net longs have moved flat, slightly up we can say, but otherwise it's flat activity also. So the institutional support has been created, and if that continues, there's no way it can be stopped. This rally cannot be stopped, and so that's how it looks like. Now, moving ahead, we will analyzing the global markets, the global currencies, and the global commodities in the market section. So, moving on the currencies, the dollar index is saying 1.2% down. It means the dollar has depreciated on 2.29 is what. That's a 4% up move. Was made earlier, and it's 1.2% of that cut down in just 1 week this week, right? So dollar has depreciated. It's a cup and handle pattern that you can see on the right side, right, which seems to have broken out and then failed, and now the neckline has also breached, and it may be retesting that support zone at the 100. So if the 100 is breached, then we can say that there may be it's a failure of a pattern that may be happening. So as of now, the dollar has depreciated. USD INR has appreciated 0.6. USD INR also has gone down. The rupee has appreciated basically, right? So 0.65% down is 81.89, and it's a wedge. It's the end, the brim end of the wedge, and anytime it can breach that, rupee will gain only if it breaches that. If it breaches also, it could take support near the 80 level. So sideways momentum. So it's good there, but rupee is still at the very close to the weakest point. Nothing much has changed there unless the breach is confirmed next week and falls down. Will it breach, or will it again bounce up a little more and go back to the all-time high levels and then breach later on? We'll have to keep a close watch. So it's a very crucial zone is where used on our currency pairs, right? So rupee is appreciated, but still at the weakest point. Dollar is depreciating and breaching the neckline of the rounding pattern, where it attempted to break out to cup and handle pattern, right? Now, crude oil has been falling down in level sideways movement is what is happening. It has moved up last week slightly, 1.5% up, 71.58. It should be okay. It's still a relief as long as it's maintained the sideways. It does not move up and break out above the median of the parallel channel. So it's maintaining below the median channel for long, which is good. So sideways momentum with the crude, and gold was trying to break out and failed for the third time the last couple of years, and then it's not ready to fall down. So maintaining that levels, but the momentum has slipped to the sideways, but it's not ready to fall down. That's what you're seeing, right? So gold still, we cannot say it's not bearish. It's still on the top. Probably it may try to attempt to make another attempt after a while. You never knows when, right? But gold facing the resistance heat and then consolidating is what we see. Now the next point is the global markets. The three global markets that we are analyzing is the US market, the mother market, Dow Jones, and Nasdaq and the S&P 500. You can see that there is a bullish green. So it's kind of S&P 500 has moved 2.5%, Dow Jones has moved 1.2%, 3.8%, Nasdaq broke out. So it's all trying to attempt to break out of that resistance zone of the descending wedge basically. There is a block of Nasdaq, it's the only one that has got slight shortage of the momentum, but otherwise it's all bullish momentum and breakout is happening in the Nasdaq and the S&P 500. Only Dow Jones is having slight problem of momentum, but that is also seems to be almost broken out of that. So which is why probably the market is moving up. Just positive. The market is also doing well, and things should turn out. You can see that the trend also has crossed to the bullish one. So big moves can be expected from here, and if that happens, then it will benefit our markets as well, and we will also see similar big moves. Right? So keep a close watch on two things in a nutshell. That is, one is rupee going to breach, USD INR going to breach the descending wedge, and rupee is going to appreciate further or not. If that happens, very good. Second thing to watch is the global markets, the mother market of US market. If the breakout is going to continue, and if big moves are going to happen there or not. Yeah, so moving on, the stock picks, two actions. One is by the heavy electricals, which is a rounding pattern. It's not a rounding pattern, it's a cup and handle pattern, and it is broken out. And volumes are decent, momentum is rising, trend is rising, and good risk reward should come in if you enter above the candle with a tight stop loss of 2 candles low. There's swing trading opportunities for the next coming 2 or 3 weeks about the heavy electricals. Trade stop losses once you need the targets if you on to it. Yeah, this is just now just what it is saying. Ashok Lelang is another one. It's weekly charts that is saying. It's a non-confirmed rounding or cup pattern. So any breakout come here could be good, and up to 200 could go clearly. It's a rounding pattern with a rising momentum, decent volumes, and a rising trend as per the ETX. Momentum as per the RSI indicator. Right? Two stock picks for the next week swing trades. Now another stock, another actionable is the Nifty options trading strategy. This is a double diagonal connector spread. We are selling the near week put and call, and we are buying hedges for the far week and put and call. Right. So basically, you can it's giving a very good range, 18,600 to 19,000. And if it is green breach, you should you should close in the opposite side. That's if it's bridging 19,050, then you should move in the put side further, or if it's falling to the less than 600, then you should move the call side, right? Both the hedges as well as the selling strike, right? So reasonable risk reward. Only if you exit a day before the expiry. Right? 2% is maximum that you should look for this trade, but it is consistently profit making. If you do that strategy, profit. So it's not that great given the fact that we had a big mega move on Friday. So hopefully it won't. Slow down a little bit after big moves. Right? Slight risk is there, but just get out of with the defined losses the moment it reaches if you're not able to roll on or roll down. Right? So the range is not that great as it used to be because of the sudden shoot up of the premiums, and that has happened on the concept because of the Friday move. So that's the actionable for the next week on the option strategy. Just to wrap up the things that we have seen so far. So the market basically did a surprise bounce last Friday because it was retracing and then consolidating kind of this last several days, and it was a sudden bounce of, especially in the bank in the Nifty, right? When it trapped the peers, especially when the previous Thursday we had a big fall following the US Fed event, and the recovery is sudden and abrupt. Hope that it did get bounce, but it is a surprise bounce that happened on Friday, and it has closed inches away from the all-time high of the Nifty. Remember, Banknifty has already done that and retraced. So about 20-15% of rally is what is ongoing, and so attempt is to continue that. It looks like only if the price moves above the 44,000 and stays there, right? So that's it. So the cup and handle pattern, rounding pattern, crucial breakout zone. We already seen that, right? A reconfirmation of that is what is awaited next week. And the moving averages and trend lines and previous breakout zones all much still intact. That is all. The only worry is that the Banknifty is, although it has done the bounce, it is consolidating. It's an inside bar. If you see the Banknifty inside bar in the daily charts, right? So that is it. And also the weekly, also it is a flat close. It's an indecisive close that has happened, and there is a band contraction that's still seen the Bollinger Bands, not an expansion like we could see in the Nifty. So Banknifty is giving some concern for the bulls. Otherwise, the momentum also is still rising in the sideways, but it's not in the bull zones after it slipped down. So you'll be a little cautious there. Otherwise, the momentum in the trend, the Nifty is bullish. Bollinger Bands are, and the Banknifty also is rising. Bollinger Bands are expanding on the Nifty, although it's not expanding on the Banknifty yet. And Fyers days, we have seen that it's net buyers once again. And the major sectors are all bullish across the sector. Bullish movement has happened, and all continues in the US market. It's turned bullish actually. It is breaking out of that wedge after a long time. So the view for the next week remains to be mild bullish. Mild just because of the fact that the Banknifty is lagging back slightly. So global cues, fears, inflation, interest rate rise, and all this still exist. So I'll be cautious about that. So uncertainty is still there providing. Crude is kind of okay levels, but rupee is negating that because it still remains weak, although some rupee appreciation has happened this week. Right? So the levels for the next week is 18,500 to 19,000 on the Nifty and 43,000 and 45,000 on the Banknifty. So medium term, the levels, that's for the next week, these levels, right? So the Nifty is a wide range, 43, 45, because anything would happen, you never know. Unless a breach of that previous, that Thursday's candle high and low only then we'll get some close. But 90,000 is what is expected. The Nifty may be doing maximum next week, right? Because there could be some resistance that may come at 90,000 rounding numbers, right? Called psychological resistance, right? Of course. The medium term, the levels are previous swing lows that very far away, 16,650 and 36,800. It's a medium level. Or long term, we can say, long or medium term. 36,800, 18,800 and 44,500. If that is having a price settles above that, then we may have continuation of the rally or rally itself. But the rally, if that happens and these levels are made, then it could be really big. It would go up to 22,000. There is another Twitter posting that I had done yesterday. If you're not seen that, refer to that. Right? How the Nifty is projected. It can go up to 22,000 above. Just like that. If that breakout is really happening, it will be a huge breakout. But yeah, so but there may be some consolidation that may happen near the 19K, and even before the 19K also. It may not be. It may take a while. Right? Before 19K is taken off. So be cautious on that factor. You may get stopped out once again. All these things will happen. But protect your capital. And that's what we can do. So use the hedge positions, particular spreads, not actual strategies helps in that, where you have defined risk strategies or net risk is covered there. So always do that hedging. Don't have naked option positions especially, right? And also long-term investing also again, when the price is falling down, not when the pricing is rising up. Trace us next time. Try to invest in SIP more. Get regular incomes by using option strategies like cash secured puts and covered calls and all that can be used for investing as well as trading. So that's my view. My bullish view remains. Fingers crossed whether this breakout is going to sustain or not. Right? Monday will tell you that. If the price moves above the Banknifty is 44K, depending on that, or is it going to fall below that candles low. So that's what you got to watch. All eyes would be on banks primarily, right? So play it safe and then happy trading, happy learning, happy investing. If you're not subscribed, please subscribe. Please subscribe to our social media channels as well. YouTube, please subscribe. We have very few subscriptions and please share it to friends and colleagues if you're already subscribed. Like and give your feedbacks and comments on that. If you want to avail the Telegram services, you can check the description details for the link. Right? Thanks for watching. Happy trading, happy learning. Bye bye.